Today we would like to review the upcoming economic data and events coming in this week. In today's video, we would like to look at the data and events coming in this coming week, but we also think it's important to cast our minds back to last week and just think about the returns that asset markets delivered. Here at True Potential, we believe that it's important for our clients to think about investing over the long run and ignore some of the short-run market volatility that we see within markets. So, as we know, over the past 2 to 3 weeks, asset markets have become more volatile, and we're seeing that come through within press articles. And if clients had decided to sell or reduce their investments over that period, that would have proved to have been the wrong decision. So when we look at the returns that asset markets have delivered over the past week, equity markets are up 3.9%. Now, that's obviously positive for clients, and had they reduced their exposure, they'd have missed out on that return. Looking at fixed income markets as well, they delivered a positive return, not quite as significant as equities, but still up 0.3% over the week. So a good week for those invested within multi-asset portfolios. And had clients reduced that exposure, it would have reduced their compound return if they think about the long run. It could quite have a significant impact come the end of their investment horizon. So as we always say here at True Potential, think about the long run and try and ignore some of the short-run market volatility, because ultimately it will benefit you at the end. Now, thinking about what's coming in this week ahead, we have the Federal Reserve meeting minutes. And in this document that will be published, market participants will be looking at the direction of future monetary policy within the US. So, as we know from the last Federal Reserve meeting, the Fed made no change to interest rates, so they left them at the range from 5.25 to 5.5, and they pretty much signalled to the market that a cut within September is likely. So the market will be looking at whether that cut is 25 basis points or potentially 50 basis points, given the way the data in the US has moved more recently. We also have PMI data. Now, that's survey data from companies where they get information from the services side of the economy, but also the manufacturing side of the economy. And as we know through these videos, they are diffusion indices. So if that reading is above 50, that signals expansion. And if it's below that 50 mark, that signals contraction. Now, we think that the market will be particularly focused on the new orders component, as well as the employment part that build up those indices. Just trying to get a better look at where global GDP is going. So if we see any weakness within those two, would signal that that slowing trend that's starting to come through in market narrative is occurring. Finally, we have Jackson Hole. Now, this is a meeting within the US where lots of the major global central bank leaders will meet in the US to discuss economic trends, monetary policy, etc. So once again, after those meetings have occurred, there's a series of speeches from those leaders. So markets will once again be looking for any glint or hint they can get in terms of the future direction of monetary policy. Thank you for watching today's video, and we'll continue to keep you updated throughout the week.